Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 3rd of February, 2022. This is episode number 2164. First off, please give me a mic check just to make sure I am starting from home today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, just jumping right into the convergent trading pre-market summary sheet, we see that we are in a risk-off mode this morning. Uh, this is mainly driven by Meta or Facebook's miss. And the miss really wasn't in earnings. The miss was in its ability to generate more revenue. It it's There's a suspicion here or expectation that this stock has saturated its market, and many other services are taking from it, taking its customer base. If I can find my cursor, here's how the pre-market S&P 500 map looks like. You can see Facebook down 23.1%, just weighing really heavy. Amazon is as well, just a little over 4%. Amazon is usually not this volatile lately. We've seen Amazon just be up, generally being up 1.5 or so, or down 1.5%. It's a little heavier today. Tesla is volatile, but that's just par for the course. And then we see Google and Microsoft off just a standard amount. So this is really tech heavy right now in this drawdown, and it's likely to carry forward into the session. The Bank of England and the ECB announced their interest rate decisions. The BOE remained at 0.5% on its interest rate, and 9 out of 9 governors have voted to hike rates versus the prior 8 out of 9. And so looks like the BOE is heading into an increase in interest rates. Then we had the ECB at 7:45 a.m. The ECB kept rates at 0%. The deposit facility rate at negative 5 basis points. The press conference is ongoing, but Lagarde has said a lot during the press conference. One of those things is that there's a chance that she kind of didn't answer the question on whether or not the ECB will hiking in 2022. We saw European equities drop. That's what's being attributed to this last big move down here, this break lower after bouncing a little bit higher. We're trending down. I don't know what else it is, but that's what they're saying. It's looks like, yeah. Um, Looks like most likely the ECB stance is changing as well. So that's where we are. Initial claims came out better this morning, but and then after the close today, we have Amazon and Ford. Amazon being sort of the last big earnings release going forward. We did get Merck and many others, Biogen, before the open. Again, we're expecting Amazon and Ford. And then going forward, the earnings continue, of course, but they're not huge players for the most part. So you could see how things are playing out. The Nasdaq's just getting a punch to the teeth right now and is wobbling. 430 points lost, down to 283 basis points. The S&P down 67. The S&P closed strong yesterday in a neutral extreme up condition, and we're finding ourselves gapping down versus yesterday's RTH session into the meat of Tuesday's trade. The areas that I'm interested in, yes, have been 45.15, and then 45.08.05. We're currently at 45.07.75. Right here, I'm expecting a bit of a base of support. If this doesn't hold, we're looking at the type of day where we sell pops. So that's where that is. The S&P profile was balanced. It is now a multi-distribution. It's got a nice little tail to it. 256,000 contracts have traded, well above the mode of what's expected. And the overnight inventory in the S&P is 100% long, short, of course, as a result of it dropping following the FB's release. And not really trading back above the settlement price. The range is pretty good at 40.50, 40 and a half. And we're looking for a session that is likely to be pretty busy. What's left on deck? We have the market releases, market services PMI and composite PMI at 9:45, 15 minutes after the open, and then we have the ISM non-manufacturing PMI at 10. The ISM non-manufacturing PMI expected to be a high impact number. So we still have the volatility. The VIX has fallen a fair amount from a week or two ago, and the rotations have come in quite a bit, so we can tighten up our stops a little bit. But with this sell-off, we may see the VIX expand back up. We'll see how that goes. Let's take a look at what was expected yesterday. I won't go over. You can always go and watch yesterday's Trader Bite. I explained scenario one, which is basically what took place. Scenario one was looking for a push to 45.80, but mostly the day was expected to be sideways. And I was expecting a push down into 45.35, and that's basically where it went. So 80s up here. So we held pretty much the range that was expected in scenario one yesterday. Very choppy. We had what was a channel I found yesterday to be difficult, choppy, hard to read, deep pullbacks, very, very balanced market. We broke the channel with a pretty good rotation. You can see the rotation down here. Pretty strong rotation, the strongest rotation of the day. Comes back in, pulls back to the cluster that it came from, and tests the trend line from above, and then off to the races it goes. Then it breaches the IB high. We breached the IB low already, breaches the IB high, giving us a neutral day. And then because it closed in the upper quartile of the range, it gives us a neutral extreme day. Up. Okay, and this generally is a reversal type of setup, although we are heading in that direction already, so it doesn't have that much of as much of a reversal day impact. It's just basically a continuation up, but the expectation overnight is that it would continue higher under these circumstances. Of course, that didn't happen because of the earnings miss. You can see yesterday that the delta, it's hard to see in here, but the delta mainly negative in this process and selling off on the close, selling off pretty good on the close, but prices stayed higher. And then the overnight session, my mouse is freezing up for some reason. The overnight session, come on, man. Has done nothing but come off. So here's Facebook right up here. Facebook just plummeted. This bar right there plummeted right down, and then continued lower. The market then absorbed at the lower end of the range, right against the point of control of yesterday. And as soon as it reopened at 5 Chicago time, 6 Eastern, as soon as it reopened, it continued to sell off. So we left this settlement way up there behind us, and we are now having a secondary impulse on heavy delta, right now, on heavy volume as well. So to me, this really looks like 35 yet again is likely to act as resistance. 35 to 41, 41 from here, 41 from there. So 35 to 41, we see that pullback right there into the 40 before it's sold off. I'm leaning short. What the important thing today is to see if we get responsive. Do we get responsive back up? That's the key. Do we start heading back towards yesterday's profile, which was a bit of a double distribution? Do we head back into yesterday's profile, in which case the target becomes 45.48 quarter, 45.50? Or do we have a pullback, consolidate into the 45.30, which is the overnight point of control, and then find our sellers and start moving down? If we do start moving down, then we are likely to push through the 4,500 and start exploring 44.95, 44.80, 3.5, and those kinds of areas. So that's what we're looking at currently. I don't know that there's much more I want to add here. Let's take a look at what's expected for today, and you guys can head off and do your final prep before the open. Okay, master levels, stock zones turned on. Let's get to 2 Vol Sigma. So we are beyond 1 volatility sigma for the close already. 2 Vol Sigma around 44.66. So we are already pushing the ranges a pretty good distance. This morning we are, just because we're selling off, don't be myopic. Make sure you're expanding your view on what's going on here. We are right in here. We are right in this acceptance. Remember, the 15 is important here. That was a breakout price, and it held for a minute before it broke lower. We have a point of control right there at 05. We have a point of control right here at 08. At 08, and that's where this stock zone comes from. And the expectation is an open auction out of range that gets responsive. And then, as I told you over the last week or so, the bounces are expected to be labored in their progression. I'm expecting the market to really fight the pushes higher. And as I said this morning in the Convergent Trading Head Trader channel, as part of my homework, I said that the overall market regime has changed, in my opinion, and the buyers are not so feverishly buying. So I expect this to be responsive, potentially back into 45.30. And then I'm looking for this to give up the double O down here. This is a double O. I don't have a stock zone there because I don't expect it to hold. And then back to 44.85 we go, consolidate here, and then the target becomes this 44.66 is the next balance area. That's the next key balance area. That's not all that much range. We're talking about 70 points in range. That's what my scenario 1 looks like. Scenario 2 is basically a market that appears oversold for some participants, and so they come in and look to buy it. So scenario 2 is a continuation lower, takes out the overnight stat, takes out the overnight low, consolidates here against the double O, potentially poking the double O, and then we see a reversal that has a good volume and an impulse up, consolidate at the open, and then start to shift back into balance, into yesterday's balance. That would be scenario 2, and that brings us back to basically 48 and 50. 48 and 50 become the targets in that situation. Does that make sense from, hope that makes sense to you from the narrative perspective. I hope the levels make sense to you. We do expect some support at this 85 as discussed. This is where this comes in, 85, and then we're looking for 66 as a key target. So if it starts to turn over, especially if it accelerates, especially if you have an impulse down like we have right here, this is an impulsive move right here. If it starts to roll over, try not to get so myopic in your view. Try not to get so itchy to book a trade or book a win. We need trades to run so they can make up for all the losses that we take. And so let it run to your next area, see how it responds. And if it continues, then you know that you need to hang in there to around 66 or whatever your risk control plan is. Good luck today, and I'll catch you tomorrow. Take care.